After Powell's dovish hint in Jackson Hole, markets took a breath today. Let's unpack what unfolded when optimism met reality. The S&P 500 dropped 0.4%, the Dow fell 0.8%, and the Nasdaq slipped a modest 0.2%, pulling back from last week's rally. Small-cap Russell 2000 dropped 1%, signaling a broad churn across the board. Trump spurred volatility again, announcing intent to replicate the Intel equity stake model as an industrial policy. He also hinted at new tariffs on furniture, adding to trade concerns. Keurig Dr Pepper announced an $18 billion acquisition of JDE Peet, sending its stock down approximately 11%, while JDE climbed around 17%. XAI filed suit against Apple and OpenAI for antitrust concerns, adding tech sector chatter to the mix. Fed rate cut optimism continues, with the probability for a September cut edging up to 85%. Markets remain hopeful for easing. Treasury yields ticked up moderately, adding pressure on defensive sectors like staples and healthcare. This dynamic highlights the ongoing sensitivity to interest rate expectations. Despite losses, Cboe's stock bucked the trend with a nearly 1% gain, hinting at strength in trading flow. The tech sector held up relatively better, with Nvidia in focus ahead of earnings. Markets remain finely balanced, still priced for a cut, but vulnerable to shifting headlines. This delicate equilibrium demands careful observation. Today was a reminder. Volatility often comes when optimism meets uncertainty. Want clear direction when headlines cloud the tape? Subscribe to Opulent Options TV, where insight beats impulse.